The government has detailed the assets Lembaga Tabung Haji transferred to a special purpose vehicle for 19.9 billion ringgit, even though the book value of the assets is around 10 billion ringgit. The SPV Urus Harta Jamaah is wholly owned by the Ministry of Finance. The Prime Minister's department says this was to help Tabung Haji cover its asset versus liability deficit to allow it to pay dividends to its depositors. The Pilgrims Fund is not allowed to issue dividends if its liabilities exceed its assets. The PM's department goes on to say that if a prudent impairment rate had been practiced previously by the old management, not at 90% level, and the provision of impairment is made on the profit and loss statements previously, Tabung Haji would have been able to hold on to all its shares. Therefore, the government's intention is to restore Tabung Haji's financial position by taking over these losses to close the widening deficit. In previous years, all the equity losses had been parked under other reserves in the fund's books in order to give the illusion of high profit and ensure that hibah payments were doled out each year. The premium for equity stakes in public listed companies was as high as 36 times. For example, Urus Harta had paid 380.3 million ringgit for a 29.8% stake in TH Engineering, compared with its market value of 10.02 million ringgit. An Abu Dhabi-controlled investment fund has halted business with venerable Wall Street bank Goldman Sachs as investigations continue over 1MDB. According to Reuters, Mubadala Investment has suspended any activities with Goldman Sachs pending outcome of its existing litigation, says spokesman Brian Lott. He says the only exceptions are engagements signed prior to the litigation, which will continue as per contractual terms. This follows legal action being pursued by units of Mubadala to seek damages from the bank for what it calls its central role in the 1MDB scandal. International Petroleum Investment, or IPIC, and ABA Investments declared their intention to sue Goldman Sachs in November. This move leaves a question mark over Goldman Sachs' business dealings in the region. Just yesterday, the Securities Commission said it had issued a show cause letter to the US bank over its dealings with 1MDB. AirAsia Group CEO Tan Sri Tony Fernandez says this quarter will show strong performance from all its ASEAN joint ventures. In a series of tweets, Fernandez says that the model of an ASEAN airline with India and Japan is really working. He adds that AirAsia Indonesia is doing real well, creating more jobs and bringing more tourists. Meanwhile, AirAsia ex-CEO Benyamin Ismail says that it plans to add new destinations from Melbourne's Avalon Airport in the future to grow the long-haul LCC's network. He says that the destinations will be based on demand and commercial viability. AAX's fly-through services via Kuala Lumpur onto India, Thailand, Indonesia and Vietnam are proving popular also from Avalon for leisure and visiting friends and family. Benjamin says that more than 100,000 people have already flown on AAX's 2 daily flights between Avalon and Kuala Lumpur, with loads at a healthy 80 to 85% between December and February. TexChem Resources has sold a 51% stake in wholly-owned unit Acumen Scientific to Delaware-based company Meriu NutriSciences for 4.28 million ringgit cash. In a boss filing, TexChem says the sale enabled the company to sell a non-core operating subsidiary and unlock the value of its investment. Acumen is principally involved in providing chemical, microbiological and environmental-related analytical testing and monitoring services. TexChem will recognise a net gain of approximately 4.4 million ringgit or 3.65 cents per share for the current FY19. The net gain consists of the gain of approximately 2.3 million ringgit on the disposal of 51% in Acumen and a gain of 2.1 million ringgit on remeasurement of its remaining stake in the unit. The disposal was completed on March 15th and TexChem now holds the remaining 49% in Acumen, making it an associate company. TexChem operates the Sushi King chain of restaurants and is also involved in seafood processing and provides polymer engineering solutions. Manulife Asset Management Services expects the Malaysian REIT market to remain flattish this year, with yields of around 4 to 5% due to market oversupply. CEO Jason Chong says yields are unlikely to pick up, considering the current interest rate cycle that is also expected to remain flat throughout the year. Nonetheless, he calls the yields pretty decent. Chong says that the only issue is capital appreciation, and that because of the oversupply, there would not be an increase anytime in the near future. Instead, Manulife is overweight on the US, Hong Kong and Singapore REIT markets. Hong Kong REITs are currently at attractive valuations and are seeing improvements in real estate fundamentals. Singapore REITs, meanwhile, offer above-average dividend income and are a good insulator to macroeconomic uncertainty.